Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jack Miller, Head of Trading over at Baird. Jack, it's great to see you again. Welcome back to Trade Talks.
Great to see you, Jill. Thanks for having me.
You got it. Let's talk about the meme stock phenomenon. It's one that we will be talking about for a long time. In terms of market structure and regulatory topics, what are you looking at?
Yeah, it sure is. And, even though it's something that, really didn't have a direct impact on a lot of Baird's institutional clients, or frankly, a number of our retail clients as well, it's really the unescapable story of the first half of the year. And it did have derivative impacts or ripple effects across our client base and business lines. So, I think the takeaway of it is that really, something feels wrong, although it's difficult to identify exactly what the problem is, or frankly, even if there is a problem, but clearly there will be pressure for the industry and for the regulators to do something and to react. So I'd kind of break that down into three areas. So the first one is just looking at the role of market participants, so investors and brokers. So specifically, what obligations do brokers have to protect clients and themselves and the system, while also providing, meeting client expectations around reliability and continuity of service. And that's something we certainly saw play out in January and February. Number two, and related to the market structure topic, is just reigniting the debate or the focus around some of the market microstructure topics like off-exchange trading, payment for order flow, and even the transaction fee pilot, which is something that we'd more or less left for dead last year. Something I did not anticipate. But seemingly some of these topics that lost a little bit of momentum or were losing some momentum coming into the year, taking on a new life here, after the meme stock phenomenon. And then, the last point is just really about the market plumbing. So things we don't talk about as often, maybe don't see in the media as much, things like clearing deposits, the role of central clearing houses, and actually this could be a pretty significant change coming up in the industry with potentially catalyzing a move to T+1 settlement for equities, which would be significant and largely welcomed by a number of market participants.
With the rise of retail trading, do you think this is an opportunity for exchanges to engage retail more?
Yeah, absolutely. And so, of course, in our current market structure, the majority of retail order flow is executed off exchange. And so if you kind of look at that off exchange volume, more broadly, that was, call it 37-38% of the total market for a number of years. And that's spiked up to, what's now 42-43% and actually exceeded 50%, in a number of days back in January and February. So it raises the obvious question, is this really a desirable situation for investors and for our markets? And, it does raise the question whether we're really getting a true picture of the true price and liquidity for a large portion, if a large portion of trading or even a majority of trading is happening off exchange. And I'd say anecdotally from our institutional client standpoint, it makes it tough to trade, at least relative to the volume that we're seeing, which is still elevated relative to pre-pandemic levels. We've had to really rethink how we source liquidity and how we go about solving problems for clients. And so I do think that there's a big opportunity for exchanges to innovate here, to bring some more of that volume, engage the retail client, bring that volume onto exchange. And it's just important for everybody to look at, why are things the way they are and address those fundamental underlying needs of retail clients to affect that change.
Do you think the current SEC regime will prioritize investor protection with the rise in retail trading?
Yeah, absolutely. And I think, to my earlier point about some of the implications of the meme stock phenomenon, definitely a big part of it, the question around guardrails, the question around the obligations of brokers around disclosure, around gamification of markets. And this is something that I thought was going to be a focus even before January and February. I guess the surprise is that the equity markets have been in the forefront. I thought there'd be maybe some more focus on other areas so far, such as cryptocurrency, for example, which is a much less mature ecosystem with many fewer kind of structures and practices in place. But obviously there's a long time to focus on that as well. So I do think that that'll be a focus in the near term.
And finally, Jack, do you think the hybrid work model is sustainable? What will it take to make it successful?
Yeah, well, so obviously we're not quite back in your New York studio here. I am in the office. I'm personally splitting time now, between the office and the home office, as is most of our team. And as we get through the summer, we're going to be looking to move toward more of an office primary type setup with some element of flexibility. And look, I think we are looking forward to interacting live more with our clients and with our team members. And I think, establishing the collaborative in-office environment is really, really important, particularly for our more entry-level team members who need that apprenticeship culture. They need those, office relationships, the social relationships that are developed in the office. But I think what we don't want to lose is some of the benefits of the flexibility that we've, experienced over the last, fortunate to be able to experience over the last number of months. And, my personal view is that I think this is really important for our industry in particular, which historically hasn't had as much workplace flexibility, just in the war for talent, really an opportunity to catch up with some other industries where, flexible work arrangements have been a little bit more commonplace. So I think the important thing to make it work is to strike a balance. How do we capture the best of both environments, as we move forward in a hybrid way?
It's a great point, Jack, especially as our industry is becoming more competitive with tech, which traditionally is a bit more flexible. Great to speak with you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.